here we go again. That Reserve Bank has officially lifted those interest rates for the 7th consecutive month this year. This delivers such a blow to Aussie homeowners.
There are now calls for there to be long-term outlook released, giving some sense of certainty to those wanting to plan ahead. And for more, we are joined by Executive Chairman of Yellow Brick Road Home Loans, Mark Bouris. Mark, thanks for being with us this morning. We're expecting this, but it's going to hurt a lot of people. What does it mean for the average home loan now?
For the average home loan now, since the beginning of this year, or since April this year, a $750,000 borrower is now paying $1,100 a month more than they were paying not even 1 year ago, which is like after-tax dollars as well. So that's a huge impost.
Yeah, and that's, there's been no, price rises in your wages. So that's just people trying to find their money from somewhere. So is there a plan in place for when this might end? You were saying that he's doubling down, the chair of the Reserve Bank.
He's doubled down, and the thing that frightened the hell out of him is that the inflation numbers now that he's now talking about is 8% by the end of this calendar year. And if I wind back exactly to the 2nd of November 2021, he was talking about inflation then for this year at being between 2 and 3% and seeing nothing likely to change it, yet it's double where he was a year ago. So you can't blame homeowners, borrowers, mortgage seekers as probably having some form of brain damage right now, because they're starting to think, hang on a minute, you flip-flopped me around the joint and now I go out and buy something and now I can't afford to make my repayments.
That's it.
So how many more rate hikes do you reckon we can see? And does there need to be a plan in place?
Well, look, no doubt the Reserve Bank does have a plan. The Reserve Bank's plan is to keep putting rates up. And they said it yesterday. They said we remain resolute in making sure we get inflation back to 2 to 3% from 8%. And they also then went on to say there will be more interest rate rises. So the Reserve Bank's plan is to continue to push rates up until they control inflation. And therefore, if you're a borrower, look out.
Yeah, and also we are approaching what we called yesterday the cliff, this sort of like the fixed rate cliff that's coming, because that's going to end in about the next 2 months. That's $30 billion worth of fixed loans. What's going to happen then? 40%
of all new loans over the last 2 years during the COVID period were fixed rates. Normally we're about 5%.
Yeah.
So 40% of those people who borrowed in the last 2 years are now going to be getting hit with a 6% interest rate from 2% to 6%.
Wow.
In 2023. So that's the cliff. And that's why they're only doing it at 25 basis point increases at the moment, because they do not know the effect of those people coming on fixed rate into variable rate.
So if they keep going up, and it looks like they will, what will happen to the property market?
Well, house prices have got nowhere to go. They've got to go down. And they are going down. And we're going to see a greater reduction in house prices as people have less money to afford to pay the so-called high prices. So we are now in a position that I think the regulator would like to see this happen, that house prices do come down. But what we're getting on the flip side of that is people can't afford to buy a house, they're now going to have to rent a place. And we've got a massive influx of people coming in. There's no rentals. So rentals actually push inflation up as well. So we've got a bit of a catch-22 going on here.
Oh, boy.
Well, hopefully they're looking into it. They've got one more rise this year and then they've got a break for January. Mark, great to see you. Always good to see you, mate.
Thanks
for coming in.
Thank you.
Still ahead this Wednesday, we are going